Hello, everyone, and welcome to the weekly roundup. Today, we will cover interest rates, inflation, key updates from the BRICS meeting, and notable earnings releases. Hello, Ben.
Hey, Eva.
Good week.
Pretty good week, actually. Lots going on this week, and made
Yeah,
a few more changes than usual. So lots to talk about.
awesome.
Yeah,
Let's get right into it. Let's start with rates. China did 25 bips, and
yeah.
BOC did 50 bips rate cut. Was this in line with market expectation, and what has reaction been?
So I'll start with the China, since we've been talking about that on and off for a while. Are they doing enough or not doing enough? They do it in reverse order, where they go fiscal first and then monetary. So that was interesting. But I think generally the tone is starting to change with China, and they've really been slow to adapt to, we'll say, developed market monetary policy. So while the cut was a little bit, I'd say muted into the market, I think their tones changed dramatically. And so I think we're getting closer and closer to where they really start to put their foot on the gas more with both fiscal and monetary. So muted, but the direction and the tones dramatically changed. And then if we talk about the Bank of Canada, obviously lots of interest in that. We get lots of questions, conversations about it. Should they do it? Should they not do it? I think it was a week and a half ago, right, when we saw the inflation number come in at 1.6, lower than expected. And I said, now they've all but said that they're going to be 50 basis points now, and the market had priced in 45 by the time they cut this week. So I would say the market generally priced it in. The one thing that I was a little surprised at is the Canadian dollar actually weakened a bit more versus the US. With the market already anticipating it, I was a little surprised. So we were looking at, I think we were around 138.40 or so right now, which is lowest been in quite some time, Canadian dollar versus US. So that surprised me a little bit, but I think we certainly will continue to see that. And the last comment on that is our chief economist, Stephen Marion, this week also said he expects another 50 basis points before the end of the year. So that maybe could change and why the dollar weakened a little more than expected, but that'll be important for us to watch from here.
Good. So the IMF indicated that inflation might be waning. What is the impact on this on future rate decisions, and what should investors be concerned about or looking at?
Yeah, so I'd say one of the charts I'll show you is a good look at all of the different countries' inflation numbers. So it's going to mean a lot of things to a lot of different people, but I think if global inflation's coming down and we'll say in check, for lack of a better term, it gives the central banks of the world a lot more flexibility from perspective of what to do with rates. And I think we probably bump around where we see an inflation impulse and then we come back, an inflation impulse and we come back. So I'd probably be more in that camp right now. But depending on the country you live in, you certainly want to be conscious of those ebbs and flows. And if the central banks really get aggressive in your country, then your dollar will face the consequences of that, as we're seeing with the Canadian dollar weakening here globally. So but inflation in check certainly gives the central banks of the world confidence to continue to cut rates.
Okay. So the BRICS had recent meetings this period with interesting outcomes. A notable one is the addition of 13 new countries. What are your thoughts on this, and were there any other insights from the meeting?
Yeah, so the meetings continue on, and even though Vladimir Putin is not welcome in a lot of countries, they certainly the world leaders continue to welcome him. So I thought that was interesting. Certainly, Xi met as well and went to this meeting, which he didn't go to the last one. And so I'd say the world leaders came together. I'd say the developing world leaders came together in these meetings. As you saw on the daily, I put out, I think, that mock bill, BRICS bill that Putin was holding. So it's actually gaining quite a bit more traction than I think maybe I anticipated. U.S. dollar is still the world superpower and will continue to be for quite some time. But as you and I talked about earlier this week, you're starting to see the different countries take renminbi or take rubles or rupees, and so these countries are starting to trade in their currencies. And does there become a BRICS basket? It's a lot easier to do a BRICS basket now than it's ever been. And central bank digital currencies, that would be kind of a perfect setup for them. So I think it's moving along pretty quick. And it'll be important to watch. Some point, does it flip materially and the US dollar faces the consequences of it? I'd say likely on the next 12 to 18 months. But certainly they continue to move forward on this and, taking payments in each other's currency. Also part of why we're seeing gold continue to do well because these central banks are taking gold on to protect their purchasing power. So it's moving along quite quickly, and the alliances are being formed, and it's a real threat to the G7 at this point.
Definitely something to watch out for. So this past week, I think about 114 companies released results.
Yeah.
So earnings season, anything interesting to note there?
A couple of things. So Tesla had their earnings this week, and so Tesla was the market was very happy. They had their earnings yesterday before the market, and stock was up 26%, I think, something off of that. And so they had good earnings. They're also starting to diversify their business, so that was interesting. It was a story that I never really understood at the start. Why can't they build cars faster? I didn't understand the direction that they've been taking, but it really has evolved, and I think it's an interesting company to watch. I'd say a little bit outside of the earnings was a merger. So Tapestry was looking to buy Capri, which are both luxury brand companies. And the Competition Bureau said no last night. And so Tapestry rallied and Capri sold off on this news. That's interesting. I'm a little surprised. So we'll see how that evolves from here. But that was a bit of a shock because typically these things are already rubber stamped before they even commit to any type of deal. So we'll see what that means. But that was a bit of surprise today.
Okay. Anything else catch your eye?
Um, Not really, actually. Those are the main things. I'd say the last thing, which we talked about a little bit, was gold's up materially and the market's up materially this year. That is something that caught my eye because it's the best the two asset classes have performed together ever in history. So that caught my attention too.
Did you make any changes to the portfolios?
Yeah, so as I mentioned, the last, I'd say, month or so, I've been looking to move out of sovereigns or government bonds and look for opportunities in some of the corporate space. And so we started to do that, moving towards some of the corporate bonds. In the charts there, I'll just comment on one of the bond pools we're looking at using and shifted into. So I did make that change. The other holding that I added was DBC, which is the commodities basket. So adding a little more exposure to commodities. So that would be oil, gas, copper, metals, things like that. Just wanted to get some exposure to commodities. If we get a little bit of an impulse in inflation here, be good to have a little bit less exposure to governments and have some more exposure to commodities. So made those changes this week.
Okay, sounds good.
Yep. Mm-hmm.
Let's go into the charts.
All right. All right. So this was a great chart. I thought that JP Morgan put out. So it was interesting just to see their views on what could potentially happen. The elections continue to heat up. If you watch this week, Harris had her annual or forum. I think it was on CNN, which was interesting, worthwhile watching, listening to hear what she had to say. But effectively, we end this week, at least by all accounts that I've seen, we're on a 50-50 or so right now, still a coin toss as to what happens. But I thought this was a great layout just to think about some of the potential possibilities. A win by Trump and a sweep. What does that mean? What are going to be the implications? So obviously, there's some tax implications, obviously implications on what happens to bond yields. If you look at this case here, the view is that they'll continue to spend significantly. So you probably get the long end move up a little bit higher. So 50 basis points on the 10-year yield. What does that mean? Which sectors tend to do best in that backdrop? So financials, US industrial, energy, crypto. So one of the areas to look at in that regard. So that was interesting. And then if we get the opposite end of the spectrum, which is a Democratic sweep, what happens there? So, there'd be some tax changes, likely a bit of a risk-off sentiment to the markets. Yields probably fall and come down in that backdrop and some pressure in certain sectors. So I thought this was a really great layout that JP Morgan put out with their views on what's happening. So you can have a look at that. To your point, Eva, question about what's going on around the world. So this is global inflation and what does it mean? So there's a few standouts where there's a little bit higher inflationary prints, and you can look at the particular countries, which shouldn't be overly too surprising. But if you look at the most of the countries, most of the developed countries, with Canada being there lower, China, Italy, Switzerland, Finland, France, Spain, Sweden, all of these countries lower. Obviously, US as well is lower. So I thought this was an interesting view to say inflation is coming down, and the central banks in tune will react to that. So this is liquidity inflows seen lately. So this is interesting to look at. This is kind of a counter trend from a perspective that we're getting to the point where liquidity is increasing dramatically. And so we've seen both fiscal spend and we see monetary changes significantly happening around the world. So this chart shows you the opposite of that. So it gives you some sense that we're likely about to hit a liquidity impulse where more money starts to flow into the system. I thought this chart jumped out at me. It's a lot like Canada. When you think about where everybody lives in Canada, they're all within a short couple of kilometers of the U.S. border. And so when I saw this is China, it jumped out at me. 94% of the people live below this line. Interesting view just around the makeup of where people live and how concentrated people live in China. So this was the BRICS expansion. This continues to have an effect. This is the BRICS expansion. So obviously Russia, China, India, Brazil, but then Saudi Arabia, Egypt, Ethiopia, South Africa, which we saw today, Algeria, Nigeria. So lots of countries coming into the mix, and the excuse me, the more and more that come into this BRICS group, I would say it starts to take over now a bigger share of the world population. Now I think we've passed over, this was prior to the 13 names added, and those are new partnerships, takes us over the 50% of the world population and GDP into the mid 30s. So this is a material impact on the world and something I think we need to continue to think about. Last two things, last two slides. This was on Tesla. So as you can see, their earnings it continued to be driven by sales. But what I think has caught me interested is these two different buckets down at the bottom, which is energy generation and services. And so if you look at obviously the increase, auto sales increased by 1%, but energy generation storage 52% year over year and services 30% year over year. So these two areas I think are really going to be interesting for the business as we continue to move forward. And so I thought this slide pulled out some of the interesting areas of the company that aren't necessarily viewed in the headlines. And so, if I mentioned, I've been making switch out of the couple of funds into corporate fund that gives us a little bit more exposure and adjusts to the prevailing market conditions. So we're moving some money into Lysander Corporate Credit Fund. And so this is, I think, one of the things that most interested me from the view of adjusting to market cycles and activities. And so the bond market, as you know, trades over the counter. So it's not an auction market like the stock market. So a little bit more difficult to track and trade. But what you can understand with is how you adjust to different cycles. And so as we came into, this is the credit quality, geographic breakdowns, performance we don't want necessarily need to focus on. But for me, when I look at it is, how are you positioned coming into, a sell-off in the markets? A big chunk of the portfolio held high quality governments, 35%. And then as we got into the depth of the COVID crisis, bonds, particularly lower credit bonds, sold off dramatically. And so they tilted their portfolio aggressively from quite conservative to extremely aggressive. And that resulted in a very excellent performance over the next 2-3 years. And so it's just looking at those different toggles that people have. And as I would note where we are today, it's the highest level of high quality that they've had in quite some time, with the view of playing a little bit of defense. They can be prepared if there's a credit event ahead. So these are some of the things that we look at when we're looking to make switches within different managers or strategies. And this is one of the metrics I think that jumped out at me the most. That's it for today. The slides, charts.
Interesting slides. You are forgiven for going over 3.
Okay, thank you. Couldn't
So
help
what
it
are we
today.
looking out for next week?
So market's been a little bit choppy here. We're getting into the end of the quarter. And so we are, I guess next Thursday's Halloween. So end of the quarter. So that's the end of the fiscal year for all Canadian banks as well. And so that's starting to wrap up. So we'd be watching continued earnings for both S&P and the TSX as we head into the end of the quarter. And it's been a pretty good 12 months in the markets in the world. So we'd see how things wrap up as we head into November. And so that'd be the focus. Continue to watch earnings and see what happens from here.
Great. Thank you. Thank you everyone for listening. For our clients, quarterly reports have been sent out via Box. If you need help setting up your Box account, please reach out to me. If you also want to schedule a portfolio review meeting with Ben, also reach out to me. And for everyone, please visit, subscribe, and follow us on YouTube and LinkedIn, Hart Investment Group, as well as our blog, Daily Heartbeats, for more financial news and data. Thank you and have a great weekend.
Thanks, everybody. Take care.
Bye.